If everyone's ready, we might make a start to our lunch and learn this afternoon. I'm Ivan Jansen. I'm from eManaged and OE Digital. One is a managed print company, one is a managed IT company. We'll talk a little bit about that later on. But our subject today is from crisis to capacity, cyber recovery and growth planning. And as you're going to find out, we're really looking at more the human side of a cyber security incident, because a lot of people talk about the technology, they talk about a lot of different areas that you can use to cover that. What we want to look at is more the human side. Huge thanks to our sponsor, Loxton Chamber of Commerce. Thanks very much for sponsoring this event, and really appreciate everyone coming out this afternoon. I know that's taking time out of what you, well, I presume you'd like to do at your work. So really appreciate the turnout this afternoon. And another sponsor is 6'4" Corporate. They are doing the videoing this afternoon, so really appreciate the work they're putting in. That will allow us to put that on the site for those people who could not attend because they had other commitments. OE Digital. OE Digital is our managed print company. They're experts in print management. They look after a number of customers around the Riverland area. Dylan's out the back there. He's our managed print salesperson, and he's friendly, he's nice, and very approachable.
Don't tell him lies.
He told me to say that. But really, he looks after the customers around. He's very new with us, but if you've got any questions regarding that, we do more than the print. We do scanning solutions, we do business process solutions as well through OE. So speak to Dylan afterwards if you've got any problems with your copy, if you'd love to know about that. eManaged is a managed IT service, fully managed, very proactive IT support services that we provide in the Riverland. We also provide in Mildura, Horsham, Ballarat and Geelong. So in fact, managed print and managed IP, all those locations. So we cover most of Western Victoria going towards Adelaide, if you can imagine that. So when I say proactive, nowadays that's becoming very, very important. Who would have thought that a cyber incident would affect your meal at a pub? But that's apparently what is happening with Hazeldene's chickens being attacked recently. A lot of pubs in around Victoria and probably into South Australia cannot serve their palmies anymore because they can't get that supply going from the chicken farm. And that's the actual result of a cyber incident. It's more than just your own business. It flows right down, and the cost to not only your business but the economy can be very large. And so that's why the government's very focused on us becoming more cyber resilient. And that's why we as a company, we've really developed our processes around that to make sure our customers are covered, and also to inform the community of what they could be doing. Even if you're not a customer of ours, that's one of our missions, is to really educate our communities on what is important from an IT perspective.
Hey, having trouble?
Yeah, I just can't figure this out.
Nah. Data breaches, we secure your data with top-notch cybersecurity measures. Compliance issues? We ensure your business remains compliant with all regulations. With eManage, your IT problems are solved just like that.
eManaged, providing proactive tech solutions for your business.
So it is a puzzle for IT. There's lots of areas to cover, and we've got a methodical approach to that, and that's how we look after our customers, as you can see from that advert. Our vision, and you can see there, is we partner with organisations looking to use technology as a competitive advantage. They want to use their technology to take their business to the next level. And that's our vision, and that's what we focus on as a company. So what's on today? Firstly, we're going to have Kent come up a bit later. I won't say Kent where I mentioned the company before, but Kent's going to be talking about preparing your business for growth. So Kent's been in accountancies. He's also worked a long time with a number of universities and teaching business type studies. And so he's going to talk about that, preparing your business for growth. And then we'll have Ben Wilkinson. Ben Wilkinson works with Team Managed. He's one of our VCIOs. It's a Virtual Chief Information Officer. For small companies that they can't afford their own Chief Information Officer, and so Ben does that service on behalf of our clients. And he's going to be talking about leading through crisis and the importance of preparing yourself for a cyber attack so that you can be ready. Because, hopefully most of us in the room haven't experienced anything major. Probably you've had minor cyber attacks, all of us here, but it's becoming more and more important to prepare for that, because it's sort of like not if, but when. And then we'll have lunch and networking, which is always my favourite part of the day, and hopefully you get a bit of time to talk to each other and talk about your businesses and the challenges that you're facing. So I'll hand it over to Kent now.
Thanks very much, Ivan, and welcome everybody to the session that we're going to be speaking about today. I want to speak about building sustainable businesses. And often, I guess, when we hear the term sustainable, we're thinking eco, we're thinking green. But sustainable also has other connotations as well. And sustainable means that your business will be resilient. Hopefully there's going to be growth as well. But the growth that you're speaking about may very much be different growth that might be taking place in, shall we say, a metropolitan or a city region. So largely what I want to try and do is to make this something that's, I guess, got some grassroots applicability and something that hopefully will resonate with yourself. Just very briefly, just a little bit of an introduction as to who I am. Yes, currently I work as an adjunct lecturer at Adelaide University, so I'm teaching a master's program at the present time for them. I'm also associated with the South Australian Skills Commission, so I'm on an industry skills council. I'm a CPA divisional counsellor, and if you go right down to the end, for me it all started as an electrician. So I've done a number of things in my life. I've been a business owner, I've managed businesses, I've taught about businesses, and in fact one of my better students, some of you will know Sam, you didn't think you were going to get a special mention, but Sam Obst. Sam is one of my good students from many years ago, and he got a special invitation. And I'm glad you're sitting in the front row, Sam, and I'm glad you've had one beer. Sam was always prepared to have comments during lectures. I'm expecting anything, Sam, but no, absolutely delighted that you have come here as well. I don't know whether that's something that resonates with you guys immediately. Perhaps when you're running your business, you might be feeling as though, hey, I'm absolutely stressed now. And you think that if I was to add some additional revenue, that's going to solve all my problems. If I could get better profitability. And in a sense it does. But let me just sort of reinforce that by having revenue growth, that means more transactions. It probably means that you're going to have more staff, you're going to have more inventory, you're going to have more stock. So in a sense, it can bring with you some additional stresses. I don't want to leave you in that stressed state. And in actual fact, by the end of what we talk about today, I'd like it to be, and I should have had Lake Bonnie there in the background, my apologies. The Wet Sundays, though, did it for me. So that's really what I'd like it to be, that as we go through our discussions today, hopefully you'll look at it and say, hey, you know what, incrementally, step by step, I can do a couple of tweaks here, and all of a sudden I can have some improvements in my business. Okay, let's just contextualise it somewhat. And these are some of the business challenges. And I'm sure looking at that list, you'll immediately perhaps tick off on a number of those challenges straight away. If we talk about access to labour, labour is tight in a metropolitan city in certain areas. Certainly for accountancy, for professions, for trades, there's challenges there. And I know from discussions I've had with people up here in the Riverland, that's also likewise, it's a challenging environment as well. So you've got, in a sense, almost sort of some extra lead in the saddlebags to have to deal with that. How can you get people to come to God's own country up here? And whilst I love the place, It's also a situation that you need people who want to spend time and to put their roots down in this particular region. So that's a challenge that you face. You've got access to capital. The reason I put access to capital is perhaps more challenging. All of the big four banks aren't represented in each of the regional towns here. And that itself means that it's more challenging compared to, say, a business owner who might be in metropolitan Adelaide. They've got the full suite of the big four, plus of course they've got some other secondary banks that operate. So for them, it's a lot easier to perhaps access capital. And sometimes, even though banks like to say that they support the regions and they might have agribusiness people, etc., I think there is a feeling that sometimes in the regions there isn't the level of support that there should be. So that's an impediment that you face as well. The last one is perhaps a two-edged sword with regards to reputation. Reputation is probably what has brought your business so far. People know you, much the same as I said, I know Sam. There's reputation that's attached straight away. I saw a couple of people with Elders. Elders has got, it's a trusted brand name, so that in itself reinforces that connections and the connectivity. And that's important, and many of your other businesses that you've got here, people will know you. But here's the challenge. What happens when you scale up? What happens when somebody fumbles or drops the ball? Yeah, that is something that's suddenly front and centre. All of a sudden, you're seeing those people when you go shopping, you see them at the footy club, you're seeing them everywhere. I can make a mistake in Adelaide. I live on the south side of Adelaide. I can make a mistake there because I've got clients on the north side. Don't go shopping with them, don't see them. They're not likely to be communicating all the time. It's a closed shop here. So in a sense, there is some really good upsides with that, but there's also some challenges. So really from the outset, what I wanted to say is, okay, here's some of the challenges. What can we actually do to navigate through some of these particular challenges? And so really what I'd like to begin by, a journey, is to say you really need to have some systems and some processes in place. If you want sustainable growth, you really need to build it upon these three pillars that I've got here. So obviously systems become important, and I'll unpack that very shortly. You've got to have the right people. Now, here's one thing that I think regional businesses generally do very, very well, and that is you've generally got good people. Often it's family members or there's other members that you know pretty well. People like dealing with those individuals. So people are crucial. Our people make the difference is often a slogan that is used in business. So you've got to get the right people. I want to just drill down a little bit on that very shortly, because you need to be recruiting. If you're going to look at growth, you need to be getting the right people for that next level, that next stage. And the final thing is, yes, I'm an accountant, but look, it is all about the numbers. Do you know your numbers? The bottom line is the bottom line. We can talk about corporate social responsibility. We can talk about giving back to the community. All of those things are laudable. All of those things are great. But seriously, you're not running a charity. You leave that to the Salvos. You leave that to St Vincent de Paul. You've got to know your numbers. And if you don't know your numbers, basically you're flying blind. So I want to give you a little bit of an insight on a couple of things that are going to help you in that particular space. So you need all of those three pillars. One pillar that's missing, well, you're not going to have that good sustainable growth that you actually want for your business. Let's just focus for a minute then on systems. What do we actually mean by systems? I've got 3 points there, and you can no doubt read those. A couple of things that I think are important. Do you have standard operating procedures? Or is it a case that, I'll use the example now of Ivan. So in Ivan's business, I do know that Ivan's got good standard operating procedures. If Ivan was to be overseas or to drop dead, that won't happen, Ivan. I know you're as healthy as anything. But if you're out of the business, your business is going to work because you've got good processes in place. I'd have to say for a lot of businesses, everything is fixated and it's centred on the owner. What happens if the owner goes? Oh, I'm used to dealing with Bob. Bob knows what to do. And in a sense, there's a level, if I can say, of hierarchical control. Bob, the owner who's had the business for 40 or 50 years, he knows everything, but he makes all the decisions. So what happens when you need to scale up? Everything has to go through that bottleneck of Bob. So that's the challenge that you've got that's there. And you'll see there the importance of documenting everything that you do. That documenting includes things such as, hey, if you're onboarding a client, what does that actually look like? Is there consistency? Is the same level of service that you get from Joe the same as Mary? All of those things are what makes a business grow. They're also the things that start to enable a business to establish growth long term. And you also need to build operational capacity. And I'm going to lead on to that in my subsequent slides. But operational capacity is really important. Operational capacity says that if you want to scale your business up, if you want to have greater revenues, you've really got to put the systems in place now. You've got to have recruited those people so that you can take that business to the next step. It's no use waiting until you're sort of at 130% and you're running around everywhere to suddenly say, oh, we need somebody else to do it. You need to have some structure in place. You need to have gone out and looked at what do we actually need to make our business tick. So in the context of the Riverland, let's hypothetically suggest you want to suddenly export directly. For businesses that haven't been doing that before, you've got to get the right systems in place. You've got to have the right people who know what's there. What happens if you're working up here and you suddenly pick up a council contract and it's going to stretch your existing resources by 20%? Do you have that capacity to do that job? Or is it a case that you're running around like the old blue-assed fly because you're running here, there and everywhere? And of course, what happens then? That's when balls get dropped and you're just not able to do things. Systems pave the way for success. You've got to have processes, you've got to have systems. If you've got those in place, what that then means is everybody knows what they actually have to do within the actual business itself. A couple of observations, if I may, with regards to people. And I'm acutely aware that sometimes it might be challenging to get the right person up here, and sometimes you might be sort of saying, hey, if they've got a pulse and they're sort of breathing, they've got a bit of colour in their cheeks, you're good to go. Could I suggest that it is really important that what you actually need to do is you need to look at structure. At some particular point when you're growing a business, you need somebody that's going to step up and be the manager. Do you have somebody within your organisation? And as the business gets larger, you might need a general manager. You might need a chief financial officer. You need to work out the structure. And for many of you, your business sizes will be different. So some of you will work for largish organisations where that structure might be in place. For some of you, you might be trying to scale up and you're trying to say, hey, who do I need? What do I need to do? And that's why it's important that you need to actually identify what is it that I actually need. It's not just about if I get another warm body, then the business is going to grow. That person, yes, they need to have the skill, but it's got to be the right skill set. And that's where business advisors, that's where chambers of commerce, that's where the University of Adelaide, there's a whole raft of different support services that you can avail yourself of. People can actually start to give you some guidance as to what might be the right structure for you. The clarification of roles. What roles? Now, when you're a small business, you're probably looking for all-rounders. And all-rounders work well. If you're playing T20 cricket, you want to stack your batting order with all-rounders who can bowl a bit. Although as Australia discovered in the T20, it probably didn't work as well as what they would have liked. The reality, though, is as you get bigger, there's more defined roles. You need specialists. Yes, you need a few all-rounders, but like any sporting team, analogy holds in business, you need people who have got specific skills. So again, a key point, make certain that you've got and identified who is it, what's the role description, what's the job description. And in a sense, that's really back with what we said with processes. If you've got your HR processes in place, then that's going to sort of enable you to leverage some optimal outcomes for your business. Culture. Culture is important for any organisation, and culture changes over time. When you start a business, so let's say you started a business, there'll be a certain culture that you will bring. what happens, let's sort of fast forward, what happens when your son comes into the business? Is it the same culture? What happens if there's 2 generations that are working in the business? Is it the same culture? Yeah, different life experiences, times have changed, there's a whole raft of things. So in other words, what you need to be thinking about as well is, if you're going to scale up, is this going to change the culture? Maybe it changes it from being a case, as I said before, of everybody deals with Bob, because Bob can't be dealing with everybody now. So it goes from just the individual, there needs to be a different culture. That Ivan's just as important, that Sam's just as important, and Joe's just as important. It doesn't matter who you're speaking with. So there needs to be that maturity of culture. And part of that maturity of culture starts to be that we want to have a resilient business. We want to have a business that's going to go the distance. So these start to be some of the conversations that you need to have with regards to the right people and hiring the right people. I want to now move on to an area with regards to knowing your numbers. And this is where I want to spend most of my time. And the reason I want to spend most of my time in this particular space is simply because I'm going to say this is the make or break. Too often I hear the story that people only ever go to their accountant to do their tax. So once a year, twice a year, they'll knock on the door of their accountant and just get their tax returns done. And if you think about most business owners, for most business owners, they're only really looking at their FY25. They've got to have that by May. So you sort of think about it, that sort of was 18 plus months ago. And if you're just going to your accountant and you just don't know what's happening, how on earth can you make some informed decisions? You are really, really looking at things that are in the rear view mirror, well and truly, as far as that goes. So one of the things that I do think that's really important is that you need to actually get some business advisory advice. Somebody who knows about the business and instead of just sort of focusing on the tax is also looking at the road ahead and can say, okay, here's the speed humps, here's what we can actually do to make some changes. So let's focus then on this issue of revenue growth, because if you want to grow your business, ultimately you've got to grow your revenues. But if you think about growing your revenues, what else takes place when you grow your revenues? Well, what we actually also find is, for most people, unless it's just a cash business, but for most of you, it's going to be your debtors or your accounts receivable. So in other words, it's going to be an increased level on accounts receivable. That also brings with it, I might add, an increase with risk. And you always get bad debts. So there's an increased risk that starts to emerge. Increased debtors is an increase in your assets. You've got to have greater working capital. And I'll explain that term very shortly. Your stock increases, the amount of inventory that you've got, you've just got to have more inventory. And that sort of follows, that's logical. If you're selling more, you've got to have more stock. But if you've got more stock, then of course you need to have more money in the bank to go out and buy that particular stock. So you start to see the situation that all of a sudden to grow your business, you also need some additional cash. And what can actually happen, and this little slide seems to have dropped down on me on that one there, that if your revenue grows by 30%, here's what can actually happen, and that is that your net working capital probably needs to increase by 40%. So in other words, you grow your assets by that 30%, so the assets being your debtors and your stock, but you need more access to cash at about 40%. So the need for cash increases more than what the assets are. I'll have a conversation with others afterwards if they'd like me to explain that in greater terms. Your staff costs, you grow your sales, you probably need to throw on an extra person. So you can see straight away that there's additional costs that start to come into play when you're actually wanting to grow your business. And one of the real challenges is, how do you gain access to that cash? Because you're going to need the cash, you're going to need the cash first before, of course, you get the actual revenue growth. Now, I should have given a free pair of binoculars for those who were sitting in the back row to actually read this, but I thought I'd just sort of explain what we mean by net working capital. In simple terms, the difference between your current assets and your current liabilities. So often it's things on your asset side, things such as your cash, your accounts receivable. They're the things that you've got sort of monetary items on that side. Then, of course, unfortunately, you've got to pay your bills. That's a thing called accounts payable. And the difference between your current assets, your current liabilities, is what we call your working capital. So that's in very simple terms what that means. But to explain it in a way that perhaps has got relevance for yourselves here, particularly those who are buying inventory, you order your stock, you can see how this goes around in this little arrangement. You've probably got stock on the shelf before you've actually sold it. So if that's the case, that you've got to pay the supplier before you make the sale, you can start to see what I'm saying there. You need that additional cash. That also means that it makes sense that what you'd like to do is to cut out the stock on the paid supplier, stock on shelf, sale to customer. That's really how you get your business to grow. In other words, it's the sales to your customer that can then fund your business. But this is a typical arrangement that most business owners are faced with. They're paying for goods and then they'll sell it at a later point in time. Think back to what we said, if you're growing your business, your sales are going up, well, that also means that you're having to pay more. So the real challenge is to try and get those sales to customers a lot quicker and a lot earlier in that working capital arrangement. Let me just give you a numbers-based arrangement. Now, it is a contrived example, but what it actually does do very nicely, I think it demonstrates how there can sometimes be a mismatch. In other words, people think, hey, I've got great working capital. I've got $40,000 worth of working capital. Remember what we said was the difference between your current assets and your current liabilities gives you your working capital. And so you look at that situation, cash of $20,000 in the bank, we've got accounts receivable or our debtors of $15,000, we've got inventories of $45,000, and there's our $80,000 tied up. However, and this is the big however, we've got to pay our accounts payable of $25,000. We've got some short-term borrowings, whatever that happens to be. And then we've got some accrued liabilities that we've got to pay. Things such as the power bill and whatever that we know that are on the horizon. And the real big arrangement that emerges there is we've got too much money in inventory. If you look at what we've got there, we've got $20,000 of cash. We're going to get our accounts receivable of $15,000, so there's $35,000. But here's the situation. We've got $35,000 that's coming in, but we owe $40,000. And the real challenge is we've got far too much money in inventory. And I'm just going to say straight out, for most businesses, one of the big challenges they face is they've got far too much in the way of inventory. You've got to monitor the inventory. Certainly if you're in an industry where there's lots of inventory, you just cannot allow inventory to just build up, because as this little contrived example shows you, what's typical is you then, in a sense, you're running out of cash coming into your business. So this business, even though it's got purportedly working capital of $40,000, it really needs almost an immediate cash injection just so that it can meet its current obligations. One little tip, and I'm not going to spend too much time on it, you've got to clear obsolete or slow-moving stock. Now, I'm sure all of you will have been to Woolies or Coles at different times, and maybe to other large department stores. Guess what happens if there's stock that they've got that isn't selling? They price it to clear immediately. Small business owners never ever want to do that. If they paid, shall we say, $2,000 for this TV, they're just going to keep it on the shelf or thereabouts. And at some particular point, they'll get rid of it. I also sell businesses for people. One of the big things when people are looking at selling their business, and I look at what stock they've got, suddenly I look at it and I can almost immediately say, well, half of that stock is just not saleable. It's no use having stock on your balance sheet or inventory on your balance sheet just for the sake of having it on your balance sheet. Here's the other thing. Obviously, there's movement in stock. You're paying tax on the difference between last year's closing inventory, this year's closing inventory. Here's what you need to do. You need to do what the top end of town does. They just get rid of the crap. You've just got to get rid of it. Sure, it costs you $10 and you only get $3 and you're probably sort of saying, well, I've lost $7. But here's what you do. With that $3, you then put that into fast-moving stock, and of course, that's how you then generate your profits. It's no use having stock that is not selling. You don't generate profits. You generate profits on stock that is turning over. That, to me, is one of the big things. And I'm sure if you went back to your businesses and looked around and said, well, even if you just do the quick dust test, run your finger over it, if there's dust there, I know it's probably a dusty environment, but if there's a thin layer of dust and you know you just haven't sold it, why have you got it? And simply saying, oh, it's going to be great for a rainy day, or somebody will buy that at some particular point, yeah, and hell might freeze over first. And your business might go under. You've got to make some decisions. You've got to convert your non-saleable inventory, you've got to convert that into cash, use that cash to then use that in other areas of your business. Here's something just to think about. It's probably something that you are aware of. Cash flow is the number one risk for small business. Absolutely. Head and shoulders above everything else. And indeed, if you look for the reasons why businesses fail, and that doesn't matter whether we're talking corporate all the way down to micro businesses, 80% is directly attributable to cash flow. And indirectly, somebody else fails, and the spillover is because you're a large client of theirs and you're selling a lot of goods, they can't pay you, and that might be the domino effect for you. That's something to think about immediately. What's your cash flow like? You've got to have good cash flow. And if you've suddenly got a situation now, you want to scale up, you want to get growth, but you just don't have good cash flow, the first thing I say is you've got to get good cash flow. You've got to have adequacy of cash. Don't work for a big bank. And one of the things that banks often do advocate, and I'm a staunch believer in it, is an overdraft. Here's the thing. An overdraft is a bit like insurance. People say, oh, I don't want to pay the interest. If I don't use it, I'm going to pay for it. Well, I'm sure you've got fire and theft insurance, and there's other insurances that you've got. I'd say just having an overdraft can be something that's advantageous for most business owners. And it's a lot easier to get the overdraft when it's fair weather rather than when the storms are and all of a sudden I need that 10,000 or that 20,000 next week. Well, banks being banks, you ain't going to get it next week. So that would be another key issue that I think that you would start to look at. I went back to a Banking Association SME report from a couple of years ago. You might recall seeing this slide, Sam. And that is the top 3 reasons that SMEs seek finance. What I think is staggering about that is, if you add really 1 and 2 are basically the same. 1 is maintain short-term cash flow or liquidity. 2 is a little bit more, it's dire straits, ensure survival of business. Almost 3/4 of the reasons people in the SME sector go to get finance is all about the vulnerability of their business. In other words, they've got problems and they now need to do something about it. Regrettably, only about 1/4 of the times are people actually looking to either replace equipment or to scale up. So, what does that tell us immediately? I think what it does do, it reinforces what I previously said about making certain that you understand your numbers, making certain that you've got the right stock, making certain that you've got the right processes. I alluded to the fact that if you scale your business up, you suddenly get more accounts receivable. So if you've got processes in place to chase up people who are slow payers. Here's one thing that I'll just share with you. So I act as a fractional CFO for a number of smallish companies. And what actually happens is when I phone the people up just to sort of check if they can pay, nobody within the company wants to do that. So they know the person. Whereas for me, I'm outside the region. I'm outside the area. I can just phone up and I can just sort of say, hey Sam, Kent here from whoever it happens to be. Look, really in need of, just wondering whether you could sort of sort us out. The people here don't want to do it because they're embarrassed about it. And guess what happens? then of course it drags on and it creates problems for you. Could I suggest you need to be proactive with your accounts receivable? You can't just let it, hey, it's not personal. And one of the things I say is, hey, look, it's not personal, I understand, and I probably don't have $50,000. Some of the clients that I'm chasing money for, it's a $50,000 invoice, and I say, look, I don't have $50,000 in my back pocket. But bottom line is we sort of need to meet wages and other obligations. Here's what I find, when you have that conversation, guess what happens? People generally pay. But if you don't make the noise, the old analogy of the squeaky wheel gets the oil is what happens. So if you're the person who keeps quiet, and it's Ivan and myself and it's Sam who are phoning up and getting paid, well, guess what's going to happen? We'll get paid and you will just be left right to the very end. So we've got to be very, very proactive as far as that goes there. I'd also say too, you need to plan ahead. So in other words, you can see most of the time, people are just looking for the here and the now. So 1 and 2 is basically about the storms come and we've got problems. Whereas number 3 is all about saying, let's look into the future as to what we can actually do. So that brings us down to our final slides. And there's a couple of things here. Some of you will be doing this. So some of this I'm just going to go over. If you're not, I'm happy to have a conversation afterwards. The first thing I want to speak about is the importance of a 12-month rolling forecast. Do you know what cash is coming in, what cash is going out? You also know something about your gross margins. Hey, there might be certain products that you're making no money on, others that you're making good money on. Maybe you've got to make some price adjustments. And of course, do you know what your monthly accounts look like? Or is it a case you say, hey, I'll leave everything like that to the accountant? So your cash flow forecast can be very, very simple. Basically, all it's projecting is right across, month upon month, what do you anticipate your cash position is going to be? I'm not necessarily talking about what it's likely to be with regards to accounts receivable. You can do that, you can do your sales, but it really is important that you understand what is my actual cash position. And when you do a spreadsheet like this, here's what it starts to identify. It starts to identify where there are some pinch points, where there's some crises. So what does that therefore then mean? Maybe that means that you start to think about some of those payments. Can we shift them to another time? Or when I spoke before about that overdraft, if we had that $10,000 overdraft, then guess what? It's all smooth sailing. You've got to have a cash flow forecast. You think about your own homes. You know, most of you would run, I'm sure, on a budget these days. Doesn't matter who you are and how much money's coming in, you need to run on a budget. Well, businesses need to have budgets as well. I know they're not sexy and I know people hate them, but you've got to know your numbers. You've got to know when the cash is coming in and, of course, when the cash is going out. A couple of little helpful ratios, and a quick Google or asking Claude or ChatGPT will actually give you some really, really helpful ratios. These ratios are really helpful because they start to identify where are you making money in your business. Again, it's very, very basic. It's very, very simple. You need to know what's your gross profit. For most businesses, you've got to have a GP or a gross margin, I would suggest, of around about 50 to 60% because you're going to have a huge amount of expenses coming through. Then, of course, you get a net margin right at the end. But it's important to know that. It's not difficult to calculate. As you can see there, it's basically year 8 sort of maths with just plugging and playing with the appropriate numbers. Our inventory turnover is really important, and I just cannot emphasise that enough. If you're not selling goods and they are just sitting there, that can be a scary number. In other words, you want to be turning your inventory over very, very quickly. Higher numbers are better for inventory turnover. Ideally, it'd be great that you bought one of those and you sold it the next day. Yeah, whatever it happens to be. Bought 10, sold 9, with one in a week's time. That's really what you're actually wanting. It's no use buying a box of these, you sell one next month, and then you sell another 2 in 6 months' time. You can see how all that's doing is just gathering dust. You're not making money in that respect. Things such as 0 mile are really important, and hopefully for most small business owners these days, mile is sort of, I would suggest something that's very, very straightforward. There's enough free courses that you can actually do on it, but just looking at your P&L on a monthly basis, What are my numbers telling me? Sometimes it'll shock you, but sometimes it's good to be shocked, because if you're shocked, then you can do something about it. If you just wait for the accountant to do it in 18 months' time, then it doesn't matter what's happened. What happens if it's a negative number and you've been going downhill for 18 months? It's pretty hard to arrest that fall if you're going down that slippery slope. Again, just a little snapshot from what a Xero dashboard does, and look, Maya does something very similar, and you can see straight away, very easily, what's in the business bank account, how's the business going with our accounts payable, our accounts receivable, and the invoices. Most importantly, what monies are actually owed to us. So, having some reports, having some form of a system that tells us where we're at is most important. Again, TV here has made it a little bit hard to read that particular arrangement, but when we grow, there's always upsides, but we also need to look at the risks, and for the benefit of those at the back, are you over-reliant on one core or key customer? And sometimes in a regional context, you might be. You might have, in a sense, all of your eggs in one basket. What happens if you were to lose that customer, or that customer was to fall over? What does that do to your business? Again, something to think about. I'm sure you've got seasonal cash swings. Again, regional economies generally have got ups, downs as far as money is concerned. Is there any way that you can sort of smooth that out somewhat? Maybe you can start to look at doing things in other sectors that might help you there. And what about succession planning? Again, family businesses. At what particular point in time do you actually allow, if you're somebody that's my age, do you allow your son to actually make those decisions? You know, at some point, the son has to take over if you want it. Or what's your exit strategy? Again, a most important consideration. And finally, do you have some governance? Because if your business grows, then maybe you need to have some other people sitting around the table that can have a conversation, that can provide some advice to you as to, hey, this might be the next best step. That, to me, is something that's important. And Olivia's going to be so glad that I've come to the final slide, which is, of course, 3 key takeaways. So what are the 3 things that you can take away, hopefully, from our discussions today? I think the first of those is you've got to be ready, you've got to be prepared. A bit like the good old Boy Scouts. You can't just suddenly wish and hope and think, hey, it'd be fantastic if I scaled up my business or I got that growth. It's all about having a blueprint, it's having a roadmap in front of you that says, here's what I'm going to do. Remember 3 key pillars. You've got to have your processes, you've got to get the right people, you've also got to know the numbers. You've also got to be disciplined about the approach. It's not just about in an ad hoc way, but it's about sort of saying, this is the trajectory that we want to go on. This is how we're going to build capability. This is how we're going to build capacity over time. And the last point, I think, is just so important. You've got to get the right structure. You've got to get the right people in the business, but there's other structural arrangements that are in place. Have you got an inventory management system? Have you got the backing of your bank so that you can actually grow, etc.? So, hopefully, you gain something from that. Thank you.
So, as Ivan mentioned, for those who don't know me, Ben Wilkinson. My role is in consultancy and strategy when it comes to technology, and probably a key point today is cyber risk, which kind of takes up the vast majority of conversations that I'm having a lot of time now. So as a bit of a high-level overview in terms of topics that we're talking about, what do cyber threats look like today? Leadership under fire, building resilience, business recovery strategy, and then briefly touching on the essential 8, which is a cybersecurity framework. But the core of this presentation is more designed about or to the human element. You know, whether you're a manager, whether you're just a staff member at your business, what are the human impacts to a cyber incident? What can they actually look like? A couple of statistics. These were from last year's report from ASCS, or the Australian Cyber. Every 6 minutes, another Australian business faces a cyber attack, and that can take on many different forms: phishing emails, malicious actors pretending to be someone. Kind of covers the whole gambit. Average cost to a business for a successful attack is $49,000 Australian. That cost is a bit of an amalgamation of not just costs to resolve a malicious attack. It can be staff costs. It can be ransom costs if you do decide to pay a ransom that is involved. But they have averaged that number out. And probably the key point that I want to raise on this slide is 95% of successful breaches are human-based. It is someone clicking a link from an email that they shouldn't have. It is someone answering a phone and providing banking details to who they thought was ANZ or Commonwealth Bank. This is not incompetence. We're all human. We're all busy in our day-to-day. We have jobs to do. It happens to the best of us, and touch briefly on the story. So again, my clients in the room, please cover your ears for this, so I don't want to have to talk about it in our next meetings. I received an email from a potential client. It was from their email address that looked legitimate at the time. I was doing multiple different things. I clicked on the link. It's taken me to a Microsoft website and started asking a ton of information, and that's when I've realised I've done the wrong thing. Luckily enough, I caught it fast enough where I could get the text to jump on, have a look, make sure nothing had been breached. But for someone who's been working in technology now for probably about 15 years, I felt pretty silly for it to happen to myself. But I mentioned that to kind of just raise the point that it can happen to anyone, and it likely will happen. These attacks aren't getting less, they're getting more. There's more and more types of threats out there these days. So, leadership under fire, and there's a few key points I want to touch on here. So, as an executive, as a manager, as a team leader, let's say a staff member brings to you, hey, I've maybe done the wrong thing. I've clicked on a link. I've given my information to someone I shouldn't have. You may start going through a bit of an emotional journey there. It could be blame. How could you do this? It could be worry or a sense of how is this going to affect not just me but my staff? How is this going to affect the business? How is this going to affect our revenue? You do go through a bit of an emotional journey when dealing with a potential attack. And those are the kind of challenges that you'll end up facing, which you do have to start mitigating. And the only way you can, beyond services, beyond solutions and software platforms, the best way to tackle that kind of stuff is through process. You and your staff need to know what are the steps that I need to take when an incident does happen. Who do I need to inform? Who needs to be involved? Who do I need to communicate with? And then making sure that everyone is aware that these things can happen and it's okay. We just need to start the process straight away. The worst thing that could happen is if an incident or someone clicks on a link and they sweep it under the rug. Sometimes the impact to an attack is not immediate. It's not click a button and suddenly all my systems are down. I can't send emails, I can't get into my accounting platforms. Sometimes it could be months before you can actually notice the impact. So the sooner that is communicated by the team, by yourself to the people you need to know, the better. And you'll end up having to make some pretty critical decisions while under that kind of pressure. You'll never have perfect information. It may be, again, months before you know how, why, this particular incident happened. This is where the process is coming into place, and this is where you're going to have to be comfortable with making decisions with 60%, 80% of the information, and just making those choices and dealing with consequences after the fact. Again, it's about speed. It's about getting your processes in place quickly to try and mitigate damage. So just as a bit of an example, this is a really kind of simplified, high-level overview of what a decision process may look like for you and your business. So you'll start off with an initial assessment of who, what, why. How did this happen? Why did this happen? What's been affected? How far-reaching is this attack? So you're just getting a very good sense of what systems, people, technology have been affected by an attack. At that point, you would probably look to discuss with legal and insurance. So whether it be internal, whether it be an outsourced contractor, whoever it might be, what are the legal implications to your business because of this attack? A lot of that is to do with what they call PII. Again, we love our acronyms in tech, so personally identifiable information. You know, the government is quite big on that. Names, date of birth, basically any sort of information that someone can steal from you to pretend to be someone else and have that cascading effect of using that information to gain more and more information. So do you have to report that and understand what your legal responsibilities are around that? And then insurance being cyber insurance. Do you have cyber insurance? What is the information they're going to ask? Do you have systems in place to provide them that information so that if there is a monetary loss to the business, you're able to recoup that cost? Ransom decisions, so in some attacks, someone may gain access to your system, they may lock everyone out, and then you may get a message or an email saying, I will let you back into your systems for 2 Bitcoin, which is about 130,000 US at the moment. Unfortunately, you're in a circumstance where you have to make a decision. Does that $130,000, if I pay that today, outweigh potential revenue, profit, business loss? And that, you know, no one else can make that decision for you. You have to make that decision. The only warning I would have regarding that, if you are ever in an incident, you know, fingers crossed, you know, it never happens to you, but I have seen incidents where the system has been locked down, they have paid the ransom, systems are back up and running, following day the systems are locked again because that malicious actor had actually been in their environment for months and they made sure that they had all different ways they could get back in and then they asked for more money. These people aren't honourable, they're doing this for a reason. There was a very good chance they could ask for more money. Communication, which is very critical. What I mean by communication is both internal and external. Internally, are you communicating to your staff and explaining what has happened and what you're doing to resolve the issue? The unfortunate thing about humans is, you know, if we're unsure about something or we don't know something, you know, sometimes we'll go and put the worst case scenario in that kind of voice. So being very clear with staff to kind of settle them down, to make them understand that, yes, we're aware this has happened, no, you won't be affected, this is what we're doing to resolve this problem. But also external communication. It could be to your clients, it could be to stakeholders in business, it could be to a board. It doesn't really matter. You need to be, again, very clear about what has happened, how you're resolving it, what is the impact, and probably most importantly, what are you going to learn from it? So we have seen that this has happened and this is what we are doing once we have resolved this issue to stop it from happening again. Which then leads into operational recovery. So yes, are your systems up and running? Is your technology working? Are your staff able to do their job? But also, are your staff okay? Are your managers okay? Like, it's a lot of stress. You know, there's potential that the business not fold, but it has a huge impact. So just checking in and also making sure that people are aware that mistakes happen. You know, you're okay, we're going to get through this. Again, that kind of deals with that human leadership aspect side of things. So what are some steps that you can kind of start taking today, tomorrow, and the next week to start building that cyber resilience within your business? Create a leadership-ready culture. So what that means is not just the actual managers by title within the business. Yes, they have a role to play, whether it be from a legal perspective, an IT perspective, a communications perspective, but also uplifting your staff underneath these managers, underneath these executives, so that they are empowered to be able to make quick decisions, to be able to escalate things to you when it is required, so that your team is working as a team to try and resolve this together. You know, it should never be a pass the buck situation. You know, say I work for you, I started 6 months ago, you know, part-time, you know, just straight out of school. I click on the link and something goes wrong. I need to be able to feel empowered enough to then escalate that, as I was saying, not to sweep it under the rug, but to go, okay, I know what the process is, and I know I need to speak to this person straight away so that they can go and speak to who they need to get this resolved. Build a crisis framework, and so that can take a number of different forms. Probably some of the more common ones we see is a incident response plan. So these are the steps that need to be taken when something happens, and these are the people who are responsible for these various things, communications, internal technology, etc. And also a wider business continuity plan, what they call a BCP, which can be quite a large document, but that's what it's designed to be. It is designed to be the Bible. It has all your information around insurances, it has all your information around contacts, what are the biggest hazards in the business, what are the communication methods that need to be taken, all this stuff in a single page that can be accessed by the relevant staff so that when an incident happens, they're not flying by the seat of their pants. They're following a step-by-step procedure that works and can be implemented quickly. But also can be iterated on. The first go around, there are going to be gaps. There are going to be things that you find that didn't quite work as well as you want, so you change, you update, you make it fit you better. It's a living document. And then establishing your crisis team structure, which feeds into the framework, which is who is your designated people for various roles. But also having a step below that. Everyone deserves to take a break. Everyone deserves to go on holiday. You might not be around. The person who is responsible for your communications might not be around. Is there someone else in the business that can quickly step into that role and take control of it? Because unfortunately, incidents don't wait for you to get back to work. Usually it's when you're away. Very important, managing stress. Twofold, managing your own stress. Let's say you are the key contact person within the business that has to handle all the various moving parts when an incident happens. And during the recovery strategy, don't be hard on yourself. Take time, take a breather, manage your own stress. You don't help your business if you're falling under the pressure. So you need to be able to manage that stress yourself. You need to be able to have your team support you and you support your team during that process. Acknowledge the stress, admit it, that you are feeling a lot of stress at the moment, because I'm pretty sure everyone would be during an incident. Bring in external support if you need to, so an EAP or a enterprise program that assists with stress. There are contractors out there, there are businesses out there that purposely do that kind of thing. They can be a huge help if you for larger teams, need to talk to someone that is outside of the business about what has happened. And I suppose at the very end, just recognise the effort that everyone went through. It's trial by fire when an actual incident does happen. So, celebrate the win when you get through it and recognise that you've come out stronger at the end of the day. If you're thinking about, the steps that need to be taken to recover from an incident, there are probably, as you can see here, three kind of time frames or three sections that, you should really concentrate on. What are your immediate priorities? So in that first hour, what needs to happen immediately? So that can be engaging with an outsourced IT vendor like you manage. It can be talking to your insurance agencies. It can be locking systems down so no further damage can be done. Again, plan it, have these steps in place so that in that first hour things can happen very quickly. Which then leads into short-term recovery, that hour 2 through to 3 days. This is where a lot of the forensics and the investigation happens. How far into the systems did this particular actor get in? What information may have been stolen? What are our legal liabilities? Starting to kind of really go in depth into how this may affect the business short-term, long-term, and making plans around that. And then your long-term recovery being 2 days to a month. This is where a lot of the operational recovery comes in. How do we get our systems back up and running? Have we reported what we need to report? Are our staff okay? Are our managers okay? And most importantly, now that we have a sense of how this happened, what are the steps that we need to take? What are the systems we need to put in place or processes to stop something like that happening again? What we find in the industry is if you have been targeted by, say, a phishing email and it was successful, staff clicked it and it's caused an incident, you are a magnitude more likely to be a target of that same kind of incident. Because unfortunately it puts a target on your back. It's not a one and done kind of thing. You know, these people, unfortunately, they have their forums, they talk to each other. Hey, I found out that business A is pretty susceptible to this kind of email. Suddenly you may start seeing a flood come through. So you need to know how to prevent that from happening again. I particularly like this graphic because it really distills quite a large topic down to some 3 key points. So business continuity and disaster recovery, which is, backups and operational continuity. So, we have time. Let's say a disaster hits. These 2 items here are the key things you need to understand to then build out your business continuity strategy or your business continuity infrastructure. RPO, recovery point objective. How much data is our business willing to lose? For some, it could be a day. That's okay because your information hasn't changed that much. For others, it could be 30 minutes. Anything lost more than 30 minutes would have an outweighed impact to the business. So you need to build around that. Recovery time objective. How long can our business not be operational before it really starts to hurt? Again, similar sort of theory. For some businesses, they could be okay for 6, 12, 24 hours. Things would be okay, staff can go and do what they need to do. We can live without technology for a day or 2. Again, for others, half an hour. If our systems are down for half an hour, the amount of revenue, the amount of profit, the amount of operational loss we could experience because of that is huge. So when you start thinking about what does our business continuity look like from a technology perspective, from a process operational perspective, use these 2 points to kind of help dictate your investment into it and the kind of type of infrastructure you might need and documentation you might need that suits your business. And it is going to come down to a business by business basis. It's a decision that you yourselves are going to have to make. So the Essential 8 was created by the Australian Federal Government in conjunction with ACO and the Australian Cybersecurity Forum. It is basically a way to kind of earmark your systems and your business against a matrix of various bits of control. Where this is quite handy for businesses is, unfortunately, cybersecurity is an ever-changing thing. On a day-to-day, on a week-by-week basis, something new could come along that could shake things up. And so it's an ongoing journey, but something like the Essential 8 at least provides a matrix for you to be able to follow and look and go, okay, I know I have reached this level as far as my cybersecurity is concerned, and then you can make a decision from there whether to continue the journey. The really good thing about the Essential 8 is they break businesses up into what they call maturity levels, starting at 0, going on to 1, 2, and 3, 3 being Department of Defence or the federal government. As far as the various silos, I won't go into them hugely, I'll just touch on them briefly. Application control deals with your software, who has access to it, what does your software actually have access to outside of itself, so in terms of files and systems. Patching of applications, so are they running the latest firmware, the latest security updates so that they can't be breached by attackers. Office macros, which a lot less common nowadays, could be, about 20 years ago, macros were quite popular within Excel and Word. They allowed you to run code and do really fancy stuff. A lot less common nowadays, and the reason that is on the list is, unfortunately, hackers, malicious actors use macros to try and inject code into your system. You open up an Excel spreadsheet, the macro runs, suddenly there's a keylogger installed on your computer. So that's to an extent why that's there. Application hardening, which deals with user security profiles within applications, but also making sure that those applications are doing what they're supposed to be doing, you're not kind of tendriling out, touching other things in the system. Administration privileges, this deals with your staff, what level of access do they have even just on their laptop? Do they have the ability to install applications themselves on your laptop? And that needs to be curbed. That one in particular can be quite sometimes hard to discuss with staff because they may feel like you're trying to, cordon them off, stop them from doing their job. But unfortunately, sometimes the hard conversation is, this is a business device that I have given you to do for business. I am going to have to control what you're allowed to use that for and what kind of applications you can install on it. 99% of the time people get that, they understand that, but it is to prevent someone from logging into that device and installing malicious applications at the end of the day. Patching operating systems, pretty self-explanatory. Make sure you're running the latest Windows operating system, especially with the change from 10 to 11. 10 being no longer supported as of the end of last year. So making sure you're running the latest OS with the latest firmware and patches installed on it. Multi-factor authentication. Who here loves MFA?
Yeah.
No? Oh, free tip, I can show you this, I hate it. I hate MFA, the amount of authenticator codes and apps and stuff I use for our systems. As you can imagine the type of information we store in our systems. It does my head in, but it is a requirement. Having a password nowadays is just not enough. Even complex passwords these days are getting easier and easier to breach. So MFA, not just for Office, but MFA for any of your software applications is quite important. Microsoft came out with quite a good way of thinking about it, like a 3-step process around user profile security, which is something you know, which is your password, something you have, your mobile phone, something you are. So your thumbprint, biometrics, face reader. That kind of completes a 3-step security process. If I need to get into Microsoft, I log in, I know my password. It asks for my authenticator app code, thumbprint on the phone, cool, there it is, I type the number in, I have access. Does it add 30 seconds to my process during the day? Yes, but it is the nature of cybersecurity these days that these controls need to be in place. And finally, regular backups. So backups can take all shapes and forms. It could be backing up data that you have in Microsoft, like your emails and OneDrive. It could be backing up your service. It could be backing up local data that is kind of key. Like you need to have backup strategies and plans for anything that is critical to your business and anything that could be used down the track as, so again, as I mentioned, personal information, medical information, anything along those lines does need to have some level of redundancy in place. So a couple of key takeaways from my presentation. Some things to think about when you go back to work later today. If your systems went down tomorrow, who would make the critical decisions if you were unavailable? If you couldn't be contacted? Is there someone that can step up? How would you explain a cyber attack to your most important client or investor? Again, it's not a shameful thing to have been breached. It's happened, it may happen, it's happened. So being able to communicate that effectively to the various parties involved is important. And what's the leadership capability that you think you could strengthen in the next 30 days? And that could be the process that you have in place. That could be empowering your team to make quick decisions or apply information as soon as possible. It could be anything really, but just something that you can implement within your business to help increase everyone's capabilities. That's me done. So thank you all. Are there any questions at all? Lovely. All right.
Well, thanks everyone. I'm just looking around the room. Everyone's got their eyes open still, which is really good. The food's coming, so I'm between you and the food, which is not really good. E-Manage, we've been working over the last probably 2 years on some bundles, which we roll out to clients to increase their cyber security levels. So we've got 4 of them here: User Shield, App Shield, Device Shield, and Threat Shield. And each of them do a different thing on your system. So User is more about shielding your user apps from people installing applications and so forth. So User Shield focuses on human behaviour and making sure your staff are trained. So it has a training component. It's also got a simulation component where it will simulate a phishing attack and send it to your staff and give you data on what they clicked on, what level they clicked on it, did they give away credentials and stuff like that, so that you can then train your staff. It's not about shaming them, it's about making them aware and making them also realise that this is what can happen and the impact that it will have on your business. Also, anyone heard of the dark web? Yeah. So the dark web is a storage for cyber criminals. They can buy data from there, such as your personal information and also passwords that you might have used on sites, such as ones that have been hacked, like LinkedIn might have been a while ago hacked. If you've got one password for every system you get on, that's a big no-no today. If you're still, especially if it's password, even password 1, people can hack that one, unbelievable. It gives you clear visibility into user risk as well. And the prizes. We've got some prizes.
Got 2 prizes.
Two lucky winners today.
This one Workbench for the Mind. It's how much do you remember? Is it a voucher?
It was for a package, a program for your business that's worth, I think, $450.
Look at that, $450 again. That's for enduring Kenton being today. Thanks for that. I know they provide.
Get staffed.
Well, look, I'll get one of these. Here we go. Tim. Is Tim here? We always do this. We always do.
No, that's Tim's it.
Tim?
Yeah, he's just
Oh, you don't want to come up. You have to come up front.
I'm a ring in. I think you should redraw that.
You don't want this one?
I'm here to support business. I'm not a business.
Yeah. Let's see if I can get this one. Mandy.
Oh, you're going to have to redraw that one too.
I've just got Mandy into it.
Oh, did you?
Sorry, I'm sorry.
Well, we'll go from Mandy to Sandy. Thank you.
That's me.
Thank you. Go, no worries. And one more. Hopefully we get.
Well, tell them what that is.
Oh, sorry, yeah. It's a mouse mat. Oh, it's a big mouse mat though.
For rats. Yeah.
So it's a desk mat. It's got, I think it's got a few, put them up the right way, eh? It's got a few cyber security tips on there as well. But yeah, so desk mat, put them on your computer and monitor it. It's, your mouse runs nicely over to the clock. So, let's see what's got here. Oh, Sam. Yeah, there you go. You're not sure, are you?
You're right, man.
Nice meeting you too, Sam. Anyway, That's it. That's the procedures for the day. Now there's some lovely food here on the side. Make sure you have your lunch here and have a chat with all the other people around here and do a bit of networking. But thanks everyone again for coming. You got any?
Yes, and thank you for filling out the form that was given to you. I just leave them on the table before you go, and yeah, don't forget your gift bag. Yeah, enjoy the lunch. Yeah, look forward to meeting you all personally.
Thank you.